Righty ho, everyone, and welcome aboard. It is a Monday once again, Magic Monday. Do you think it'd be magic? I don't know. I asked you, didn't I? Thank you, Angel, and thankfully everybody is now in the room that has been waiting to come into the room, and it is good. We are good to go. First up, as always, we're going to check in with the pound versus the US dollar, or as some would call it, the cable. And that looks like a range to me, guys. Would you say? I would. Monday, Friday. Okay. I think we can actually trade this. Today we have a high here from Friday, and we have a low here from Friday. And of course, all of today is well inside that range. So let's go with a breakout trade today. Now, those of you who are in the room for the very first time, thank you for joining us. Number one, you can't see my charts. Still can't see my charts? How are my charts, guys? Can you see my pound US dollar chart? No. Well, stone the crows and starve the lizards. Let's try that one. How now? Okie dokie. Thank you. And g'day to everybody. Okay, so let's go back to where we were. Those of you who are here for the first time, I was thanking you for being here, number one, and welcome. It's good to have you on board. And I hope you get a little bit out of the session. And if you choose to stay for a week or so, then I hope you get a little bit more out of it. What we do at this time of the day is see if we've got a setup to trade a breakout of the pound versus the US dollar as the market opens in London. And generally the rules for this change frequently so we can get the right formula so that we can then say, all right, this is the way it should be traded. Or indeed, this is a very bad idea, we shouldn't do it. So that's what we're doing at the moment, is still in test mode, and we haven't found the right formula. That's why we're still in test mode. So the current formula is we trade the 48-hour, and by that I mean 1 day prior and the current day, not actually 48 hours. And if that range is suitable for us, we trade the break. Now, the suitable part I'll explain a little bit later, but this one, I like the look of this one, so we'll trade it. Now, we're trading it at very, very, very low risk, and the reason for that is because we don't know if it works or not, right? So if you are thinking of putting any money on the table for this, please, please, please make sure it is a very small amount. Okay, so we need an entry for the long. So we go 5 pips above the high of the range, the 48-hour range, or less than that, as I said. And the high of that bar there appears to be 1.37792. So we'll round that up to 1.3780, and then we'll add 5 pips just to get out of the spreads, right? So the actual entry level will be 1.3785. 1.3785, and the stop loss will be 3 pips under the low of the range. So 3 pips under that bar, which will take us to around about, don't trust that, that doesn't look right to me. Yeah, it's right, okay. The stop loss will be at 1.3716. 1.3716. Now, that's the long order. So we place 2 orders. One's a long, one's a short. And the short will be simply the reverse of the long. So the entry will be at 1.3716 and the stop loss will be at 1.3785. See if I can remember that. Okay, so there you can see the clear break that we're looking for of that range. Now we put the short in, sell stop, same amount of money, of course, very little, and 1.3 Can't remember. 3716, I believe. I'm sure I'll be corrected if I'm wrong. And 1.3785. I had a vitamin B12 shot today. Maybe that's done it. Memory's superb. I used to remind the elephants, like I said before, but getting too old, guys, just getting too old. All right, so both orders are now in place. We've got a sell stop, we've got a buy stop, and our stop loss is where the entry is for either. Now, if it triggers, if either triggers, and it may well not, then we cancel the other. So if the short triggers, we cancel the long, and vice versa. Our take profit levels, I'll put those in for you. Now, the risk that we're taking here, 16 to 85 is 69, right? 69 pips, 2.5 times 69 is, somebody quickly, 2.5 times 70 is 140, 175. So it'd be what? 69 times 2 is 138, plus I'll have to go to the high side, won't I? Plus 30, plus 35. So 173 pips. I think I've got that right. So 173 above there would be 1.3958. I know somebody's checking this, right? 1.3958. I think I'll check it anyway. 1.3958 is around about there-ish. Might want to just sneak that under the monthly pivot, but we'll leave it where it is for now, because it may not be right. 1.3958, I think I said, didn't I? Come on. And to the low side, 2.5 times, what did I say? 158, I think I said, didn't I? No, I didn't say that. Let me see what that measures. That'll give me the number. 175, was it? Must be 175. So 175 below there, let's do this the easy way, would be 1.3541. 1.3541, which is right there. Okay. Now we simply wait and see what transpires. Why is it that number? The reason it's at that number is when Ash and I did the last review of this strategy or this method of trading, we determined that 2.5 to 1 was actually the sweet spot after breakout. Now, there were some that were 8 to 1. There were some that were 15 to 1. There were lots of them that were inside 1 to 1 and et cetera, et cetera, et cetera. So the mean, if you like, of the breakout seemed to be around about 2.5 to 1 mark. That's why we're using those numbers. All right, so let's leave that one alone and talk about this week. This week is the last week that Ash and I will be in doing the show for 5 weeks, I think it is. We're having our annual holiday, and that starts at the end of the week, of course. Ash is actually not here today, tomorrow, Wednesday, but he'll be in to say goodbye on Thursday. Now, Thursday, as I say, is our last day. The month of August will be, we're not leaving you high and dry. We have the pleasure of introducing Lloyd. Now, those of you who do not know Lloyd is a member of the Actions to Wealth senior trading team. And I've got to say, Lloyd would be the hardest worker in terms of research and development into his trading systems that I've ever seen. and I've been around for quite a while in this industry. So you guys should get some very, very good insights from him. G'day, John. How you doing, mate? You should get some really good insights from Lloyd, and I would encourage you to quiz him as much as you possibly can. He's an absolute student of charts, numbers, all things. He really, really does work hard to get his success. Unlike me at the moment, who doesn't work hard at all on trading, and that's why I'm primarily trading end of day at the moment. In fact, exclusively trading end of day at the moment, because I just simply haven't got the time to put into it to trade intraday charts. Unlike my good friend Lewis, who has been on fire lately. No telegram through the next 5. Okay, no, that's. Let me put it again. There will be telegram. Yes, there will be telegram. I will be. I'm not going anywhere, so I'll still be doing. I'll still be doing my previews in the morning, so they will be posted in the Telegram, absolutely. And if I actually see a trade somewhere, I'll throw that in there as well. Awesome, mate. Awesome. So back to my previous conversation, which was all about Lloyd. He's going to come in tomorrow, and I'll introduce him to those of you who haven't met Lloyd before, and you'll be pleasantly not surprised. You'll be pleasantly treated by Lloyd over the next month, starting this time next week. All right, enough of that. We'll get further into that later in the week, as I said. Now, what are we going to do today? Because I'm flying solo. Well, I thought what I might do is go through exactly how I do my thing on the end of day charts. Why I do what I do, how I reach the conclusions that I do, and how I set the week up in particular, because it is Monday. After all, I can show you from pretty much scratch how my week starts and exactly what I'm looking for, and wait, of course, until they turn up. I think I've actually got a trade. I haven't looked at it today, but I looked at it yesterday, and if it's still as it looked yesterday, I will be placing an order very shortly. Kiwi CAD didn't work. Yeah, Kiwi CAD, we were kind of waiting on that to do something, weren't we? Kiwi CAD. Let me see on Kiwi CAD. I've got all those orders in. I've only got one left in. Euro Swiss is the only thing left in the market at the moment. Oh, sorry, pound Kiwi is still there as well. Still a little bit out of the money, of course. But that's all I've got left in the market. Still waiting for those pound pairs to trigger. Let's have a look at Kiwi CAD, shall we, Lewis? Now, last week you were talking 4-hour chart. Yes. And we were back here. Look at that. Wow. We were back here and you were looking to trade the break of the daily pivot from memory. So you got in, didn't take any profit at the weekly pivot, mate? That's interesting. But since then, it's come pretty much straight back to entry, has it not, or thereabouts. Now, I, on the other hand, was considering that we were looking at, on the daily chart in particular, we were looking at a potential false break here. That's kind of still there, but it didn't come in a timely fashion, really. You really want the Friday bar, or the Friday bar, to be the bar of the trade. Yes, it is a reversal bar off what now is the weekly pivot. Let me get rid of that if I can. I can't. There, that's gone. So do we have what we need to trade it short? It's kind of there. I'm not averse to it, but I kind of have to be in love with it. Kiwi CAD. Let me have a look. Risk is 63 pips roughly. You haven't really got one-to-one to the monthly pivot. That's not a huge concern because you can take profit. Also got a base here. This is a higher, 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 low, higher, 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 low potential also. Yeah, I'm inclined to think I'm not really in love with it, to be honest. Okay, yeah, you got a break even now. Cool. Kiwi CAD. I think there's probably better opportunities, and let's speak about those, shall we? I'll do that first, and then I'll come back and tell you why I've arrived at my decisions. I think Euro Pound is the one for me. And the reason I think Euro Pound is the one for me is based on a few things. If I go to this chart here, the most dominant feature I see is this big double top or a quadruple top, call it what you will. That's the most dominant thing I see in the chart. But I also see a range here. That's pretty clear. Where the bottom of that range is not so clear to me. So let's see if we can work that out. Now, my rules for a range, right? And this will help later when I go through and explain to you why I get where I get. 2 equal highs and 2 equal lows. That begins the range. And once I've got those, I can then put that structure in place. It then becomes a tradable commodity. In that, what I'm looking for then is price to go from the highs to the lows, from lows to the highs. Obviously, when we visit the high, we're looking to go to the low. When we visit the low, we're looking to go to the high. So that's the definition of range for me. So let's join those lows and highs, these two highs here and these two lows here. Now, you can use the bodies, you can use the highs and lows. I don't care what you use. If it looks like a range and it smells like a range, it's probably a range. And for that reason, I think you can reasonably use either the lows or the open and closes. I'm okay with either one. And you'll find as time goes by that it will become clearer where the bottom of that range is and where the top of that range is. You could sneak this one down to here if you wanted to, because you've got a lot of highs through here. But I'll keep the extremes at the moment. And I think I like that level there, maybe even there, because it picks up this close here, and we've got that low there as well. So I'm okay with that range. Now, the problem that we've got here at the moment, and I'm a monthly chart, don't forget, this is big picture stuff. The problem we've got here at the moment is that line there, which is the weekly pivot, or is that next week's weekly pivot? No, that's the weekly pivot this week, I believe. Let me get rid of that and go tighter. Yeah, so we're bang on that. But what am I looking for here? Am I looking for a higher low, or am I looking for a lower high? Have we been to the bottom of the range? No. Therefore, we're still coming off the top, right? We've already got our lower high here, and it does what it does. But I think because we haven't been to the bottom yet, we're still looking for another lower high to trade. So I really think this bottom here is still in play. And if we get an opportunity to trade it there, happy days. Weekly chart gave us a key reversal bar. Now, this is what I'm looking for very much so on the weekly charts. Why? Because the weekly charts really do give you a strong indicator as to certainly what happened in the previous 5 days trading. But to my mind, what is likely to happen in the next 5 days of trading. Now, this of course will oscillate unless, of course, we get a big move and a substantial maybe news event or whatever the case may be, something to drive it, in other words. But this will, throughout the week, oscillate, and it may go up to here and it may come down to here, et cetera, et cetera, et cetera. So what you're then looking for is something to solidify or put a rubber stamp on. The word I'm looking for escapes me, but you know what I mean. It's confirming, if you like, this candle here. So this candle here, yes, it's a key reversal bar. Yes, it's in a fantastic position, but it's also got to have a little bit more context than just a key reversal bar. So the context I've just given you is I'm looking still for the lower high. Is that it? Maybe, I don't know until it actually plays out. But what I do like about it right now is we've got, yes, the key reversal bar. Yes, it's got a bit of a green body, which means that we've got a little bit of room to get into the market. So we've got room for the market to make a decision, in my opinion. If the market makes a decision that it's going long, who cares? We're not going to be taken into the trade. But if the market makes the decision that this bar is definitive and is going to drive the market, then it should take out the lows of that bar and go to the low of that bar in the first instance, which is where I would be looking to take my first profit. Why? Because at the end of the day, we've still got a bullish engulfing bar here and potentially a higher, well, not even potentially, we've got a higher low here. No question about that. It's there. And the market reacted off that by the look of it the week before, drove price up here. And for whatever reason, Euro pound came rocketing back and put in that big key reversal bar. So that's really what I'm looking for. Looking for some form of reason to suggest to me that that key reversal bar can actually work. So I will then look for entry. So the daily chart is actually giving me very similar to what we just looked at on Kiwi CAD. It's giving me a false break look, if you like, on this resistance trade line. It's also a false break of the channel. There's a channel in there as well. I don't know why I haven't got that in. I should have it in, but that's pretty clear to me. Whoops. That must be colored blue, I'm guessing. Yes, it is. Okay, let's change the color. How do we do that? Channel properties. There we go. Color. Let's make it yellow just for fun. There we go. So let's bring that into where it needs to be, probably in that vicinity there. Two highs, that high, that high. And does it match up down the bottom? Hell yes. Low, 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 low. Perfect. So that's a really good market structure. And market structure is super, super, super important. It gives you the confirmation that the key reversal bar, the range, the lower high, it's just another layer that says this is potentially good to go. Because it's not only a false break of that trade line. In fact, it's a better false break off the top of the channel. Why? Because my definition of a false break is this. Everything happens in twos, right? You get the breakout. Then I'm looking for two candles that open and close above the break of the range. The next bar or subsequent bars thereafter, those two bars, need to come back inside the range, of course, being the descending channel. And then the very next bar after this one tests at worst the break line or the trend line or the top of the channel, whatever it may be. And if you look closely, that has done that to the pip. So it's retested that to the pip. It's not only that, it's also a false break of the monthly pivot. Same thing, break, bar, back, retest. So if I don't trade that, I've got rocks in my head, because that is if I had to write a book about the way I trade and the formation of a false break, I would instantly go there, because it's giving me a false break of a trend line, it's giving me a false break of the top of the channel, and it's giving me a false break of the monthly pivot. And if I look really, really hard, I can probably even find a false break of the weekly pivot for the previous week. And we're coming off the top of the range, and we're seeking, the one thing that we really don't have on this chart is a lower high. And that's what we look for when we come back inside the range. But I've got to trade that. So no matter what, that is exactly what I'll do now. So let's do that. It is a sell stop. And I would trade this at full risk. Sorry, that's not true. There's one thing I haven't checked. I haven't checked. Oh, yes, I did check it before. Remember I said earlier, I want to know the most dominant feature on the chart. The most dominant feature on this chart for mine, apart from the structure, is the double top. Extremely toppy. There's the hint of an inverted head and shoulders in here. I get that. But to me, that's far more dominant. That trumps it. And for that reason, I've got to look for shorts. So that was the missing piece of the puzzle. You've got to have that market structure in place. Or for those of you who like trend, and sometimes they're the same, sometimes they're not. If it's trending on a primary trend, so a monthly chart, it's trending in the direction you want to trade, then on the weekly chart, that's a-okay. Same on the daily. So full risk on this one. It is a sell stop. And the entry will be underneath the lowest of those bars. I'm not sure what they're probably equal. 85,399, 85,404. So we'll make it 85,39, and then we'll take our 3 pips off that. So it'll be 85,36, 0.8536, 84536, yes. And the stop loss will be above the bar. Would make sense to have a look at the weekly pivot and maybe even sneak it above there. What's the difference? Difference is about 6 pips or 8 pips. Doesn't make sense not to, right? For the sake of 6 or 8 pips, it doesn't make sense not to include the weekly pivot in your resistance calculations. So let's go with 85.93 as our stop loss. And place. There we go. You can see the entry. TP1, you can see the stop loss above weekly pivot. TP1 is going to be at a strategic level also, and I won't be using a formula for this. I just use what makes sense. Now, what makes sense to me is that level there, 85.09. Why? Because it has a little bit of form over here. It's the open, or it's the close of this, sorry, it's the open of this bar. It's also the high of this bar and the low of this bar. So it's got a little bit of confluence there. It's just above WS1. That really doesn't concern me that much because it is a daily order anyway. And gives us about 24 pips off a risk of 56. So my rule for TP1 is I've got to have at least 1/3 of my TP1, 1/3 of the risk. So if the risk is, in this case, 50, what was it, 54, I would need 18 pips of TP1 before I take the trade. Now at TP1, which is there, we will remove, I will remove, you can do what you like, I will remove half of the position. So at that point, half comes off. So you put half in the bank and you move your stop loss, whatever that distance is, above your entry. So what did I say it was? 20 something pips. Say 26 pips. I would move my stop loss 26 pips above entry, which would bring us in around about there, just above the daily pivot. Perfect. If that actually pans out. So there we go. You now have a very, very good insight as to what I think in terms of weekly key reversal bars. They are awesome to trade, but as you can see, you've got to have context around. It's not a matter of going, okay, there's a key reversal bar on the weekly chart, got to trade it. No, it doesn't work that way. You've got to have some space underneath you to take profit. It's a little bit of a concern with that level there, I'd have to say. We're trading straight into that, but thereafter, I don't see any risk that isn't calculated here. I think that's perfectly acceptable to trade that down to there to get your TP1 in. So that is euro pound. Now, I'll briefly go through the rest of these. I chose 4, right? Now, how I get to that point, going back to here again, is I pick out all the key reversal bars. So I go to my weekly chart and I'll show you what a key reversal bar is, those of you who don't know. And I wish whoever programmed this market scanner would just erase that line, whatever was in their heads. Sorry, Peter, or whoever designed it. But what is it there for? It just covers up my highs and lows. And it's just annoying. Really is annoying. But I love the market scanner. Don't get me wrong. I love it for the reason that I don't have to go here and click here, chart window, all that sort of garbage that you have to do without it. So if you don't have a market scanner, I'm not necessarily saying this is the bee's knees, but it is good. There's no question. All I have to do is click over here and not go through all that process. I think it's fantastic for that. But please, Peter, if you're listening, and I'm pretty sure you're probably not, although it is London time, yes, get rid of that. It's just a pain in the A. And if anybody knows why it's there that does use the market scanner, please tell me, because I've got no idea what it's useful for. Anyway, so weekly chart. If you don't have a market scanner, go through the process over here and use whatever ones you want. I just go simply click on here. Is it a key reversal bar? Well, first you need to know what a key reversal bar is. A key reversal bar is a candle or bar whose, let's say we're going in a northerly direction, so whose low is lower than the previous bar and closes on or near its high. Does that one qualify? 2 points, 2 points only. The low has to be lower than the previous low, and it has to close on or near its high. They're the only 2 criteria that you need to identify a key reversal bar. And it can come on a weekly chart, it can come on a daily chart, it can come on a monthly chart. I wouldn't trust it on anything less than that. Daily, okay, thanks, John. Confirms the bar, right, got it. Okay, hate it. Anyway, I'll get over that. So where's a key reversal bar, guys? Is that a key reversal bar? No. Why? Because it didn't close on or near its high. Here's its high here. Is that a key reversal bar? Low, lower than the previous, closed on or near its high. You bet it is. And you would have got, you'd still be in that if you didn't move your stop loss, which I would have. So I wouldn't be still in it, but I would have taken profit up here somewhere, that's for sure. So that's what you're looking for, something that looks similar to that. Got nothing there. Now, this can go either way, right? It doesn't, it's not trend dependent at all. In fact, I can't really put a number on that, can't put a figure on it or a ratio on it, but I tend to think that I trade more with this in a counter trend or retracement fashion than I do with trend. Could be wrong there because I don't take notice of trend when I'm doing this. So simply identify them is what, so here you wouldn't be looking for a key reversal bar to the high side because the low of your candle is way above the previous low. What you would be looking for is coming back the other way. If this candle's high was higher than that high, sorry, lower than that high, sorry, higher than that high, and it closed on or near its low. So I'll find one of those for you in a minute. So that doesn't qualify in any way, shape, or form. So you simply skip through that. Dollar yen, that's why that line is a pain in the ass. Key reversal bar, lower than the previous low, closed on or near its high. It looks to me like it's on its high. So that for mine is a key reversal bar, no question. So you would mark that, dollar yen, and then move on to the next one. Dollar Swissy, key reversal bar, no, because the low is not higher, sorry, it's not lower than the previous low, and the high is certainly higher than the previous high, but it hasn't closed on or near its low. So that's what you're looking for, either or. It doesn't need to be going in the direction you assume the market wants to move. Definitely not. So that's not one. Dollar CAD, higher than the previous high, closed on or near its low. Tick. It's not on its low, but it is near its low. And it's certainly a key reversal bar as far as I'm concerned. So you would tick that. Anyway, you go tick, 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 all the way through the ones that are. And then I would come back and analyze them. So let's say we chose 4, right? Pound US dollar was one of them that we chose. So the weekly charts suggested key reversal bar to me. What else do I see on the weekly chart? I see a double top, but I don't see a lower high. I see a lower low perhaps, or maybe I've got a lower low there, but it didn't give me a lower high at that point. All it gave me was a range, which is broken to the short side. And now we've got a massive rejection with the key reversal bar of last week's price action. Sorry, the lowest of the last 3 months. Doesn't matter the time. It matters if it's a substantial level. It has been resistance. It has been support on 1, 2, 3, 4 months in a row. So here's a chance for this one to put in that lower high, maybe at the monthly pivot, which is untested. And that's kind of what I've got in my head. What's the monthly chart telling me? Monthly chart's telling me that we've potentially got a range forming here. A couple of equal highs here, a couple of equal lows here. It's taken a hell of a long time to develop, I've got to say. But we've since put in, since we've last visited the bottom of that range, higher high, higher low, higher high, higher low, potential, not there. You've also got the break of a range in here. This range, right? Now, what do we look for as range traders? We look for price to come back inside the range, equal highs, probably in here somewhere, equal lows in here somewhere. So there's your range. As range traders, we're looking for price to come back inside a range and then give us either a higher low or a retest of the base of that range, which is what we've got. We've got a break of the range, 2 candles, which have opened and closed below the range, then the candle that came back in, then the very next candle retested that level there. So that's very similar to what we're actually trading on. What are we trading? Euro pound. It's just the reverse, right? Now, I wouldn't trade this one because, well, I could split my risk over euro pound and pound US dollar. They're not exactly the same trade, but they're probably going to give you a similar result. So you could either A, split your risk over pound US dollar and euro pound because you're still trading the pound long on both occasions, or you could not trade this one and rely on euro pound. Either way, or you could trade this one and not rely on euro pound, whichever way you went. It's very, very similar trade, and it's relying on a false break. Now, the trend traders here would be going lower low, lower high, lower low, lower high, lower low, looking for a lower high, which to my mind isn't there yet, but it could well come in here somewhere. And that's what I'd be looking for. So definitely not looking for shorts here right now. And in fact, on the smaller time frames, that's looking pretty good for a long, I would have thought, depending on where that candle closes on the 4-hour chart. If it were to close maybe on DR1 or just above DR1, that then gives you a dominant break of the trade line, which is also a trend line by the look of it as well. So that's kind of where I'm at. So all those layers are telling me pound US dollars going long, because we've got the weekly, we've got the market structure that we want, which is a potential false or a false break of that range. We've got an untested monthly pivot. I think this is eminently tradable for a long. Kiwi Swissy was the third of my choices. Now, this looks very much like a very nice retracement, probably a channel. We could put the channel in. What are we looking for here? We're looking for market structure, remember? Market structure gives me a very strong indication as to what may happen next. It's not perfect by any stretch. And I don't like price action in there either. But what I do see is a better market structure. Or at least I think I do. My mind's eye is telling me there's a better one. And it is equal highs in here, equal lows in here. So we've got another range. And not only that, we've got this previous resistance area, which I think has got a fair bit of form anyway. It does. So it's been strong support here. A little bit of resistance here that broke. Then we came back to it. Didn't really offer that much resistance, but now it is offering support for us. And that to me is indicating that this may well go long. I've got to have more than I'm seeing, but that really does indicate to me that this could go long. The next thing that I see is the potential for this to be a right shoulder. We've got a left shoulder. We've got an ugly head in here. Then we've got a break, I suppose, above, and then we've come back to that level. It's not perfect, and I probably wouldn't rely on that. But it's also probably giving me this scenario. I know it's getting very complex, and I'm sorry for that. I hate all these lines on my chart, but you can see where I'm coming from here. It's hit the bottom of that range, which is an ascending channel, which has got great form. It's been support here, support here. Then it broke. Sorry. Yes, then it broke, put in another support level. False break of that now is what I'm seeing. And we're right at the bottom of that range. We're right at the bottom of the rectangle. And the only thing that's missing here is, gee whiz, look, got to get rid of this. I'll just go mad. No wonder I can't have indicators on my chart. Get rid of that. The only thing that's a problem here is that we are close to the top of this channel, which is that one there, right? That's the only problem that I see here. Is that enough to stop me trading it? Well, depends on where the entry is. The entry is probably on a smaller time frame in a reasonable enough position to get us plenty of, or give us plenty of room to take profit before we get to that level. Daily pivot, for instance. So I'd be okay with that. And it's already giving me potential higher low here with a red bar candle across the weekly pivot. That looks really good to me on a 4-hour chart. So I'd be looking at that very closely when this candle closes, but it's not there just now. But I hope you're getting the drift as to how I go about why I choose these things. It's a multiple layered thing. It's not a single key reversal bar. Starts with the key reversal bar. That's how I filter it, right? Once I've got the key reversal bar, I then go into analysis mode, and the monthly is probably where it needs to begin, because you need to find the most dominant feature on that chart. Now, this one's very confusing. It's either the double top or it's the double bottom, which I'd go with that because it's just more pronounced to me. Big reversal, head and shoulders, or inverted head and shoulders here that's now broken the neckline, come back. It's probably not retested the neckline, which would be a bit of, if you call that the neckline, maybe. But this level's got a lot of support and resistance areas on it. So I'm inclined to go with this is the dominant chart feature, the double bottom. And we've since put in a high, 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 low, high, high, gone into range, but potentially a higher low. So then I go, oh, Gary, white line can be moved by pressing plus on the daily chart. You might have just saved my soul, mate. Thank you. I'll get to that in a tick. Awesome. You guys are onto this. Thanks, John. I'll get to there in just a tick when I've finished discussing this. But you can see how strong that level is, right? So no wonder price hasn't been able to break that level anytime in the recent, what am I on, weekly chart? 1, 2, 3, 4, 5, 6, now into the 7th week. Just how strong is that level? Well, we've looked at the monthly chart. It'll do me for a strong level, okay? Some people would call it a key level. I'm completely cool with that. So have we got a lower low, a lower high range? Have we got on that chart? Have we got higher lows and higher highs? No, we don't on any chart except the monthly. So that's all very interesting, very confusing in terms of directional bias. So I would then go to probably the market structure that I've got currently, and currently means the daily chart. Have I got one? Yeah, look, I think I have. It's twofold. It's either that, in which case we're looking for a higher low, or equal lows, 2 equal lows, 2 equal highs. Probably there. Or it's that, in which case we're looking for a higher low. Still, same thing. So are we biased long? Yes, we are biased long. Do we have a setup? I certainly don't on the 4-hour. I don't on the daily. So I haven't got a setup. So why have I got it on my chart? Because I'm waiting for it. I'm waiting for, see, this is clear to me now, what I need to do. I need to trade long, but I need to wait until I have got that higher low. And at the moment, I simply don't have that. So I'm just not going to enter the market here. I'll wait for that higher low. We've got a weekly pivot sitting here in wait. So a nice rejection of that would be cool. And then we could look to trade it long. We could also look on a smaller time frame if we so chose. 4-hour chart, still not giving it to me, right? I wouldn't be trading in here. This is super danger territory. High test bar, low test bar, low test bar. You've got to wait for something to give here. And hopefully that give will be down. And then we'll get a strong indicator that that price is ready to go if it does give us a nice rejection bar. This will be a rejection bar, but look where it is. It's dead set in between the pivots. It's a no for me. Definitely a no for me. But wait on Kiwi dollar. I'm going to do one more. Euro dollar, which is, wow, had a little bit of a rally in the last half hour or so. Wow, smashed it. Did the pound do the same? Not so much. So we've got euro buyers. Okay, that's interesting. Let me analyze the euro. Key reversal bar, weekly chart, for sure. You remember euro dollar last week? Is that? Oh, it's a trend line. I don't know what the hell's going on here. Is not a key reversal bar on the weekly chart. So why have I got euro dollar on my chart? Because I've already used the 4 up I only had 4. Euro dollar is there just because I like to trade euro dollar. And if we're going to trade euro dollar, we're going to trade on the small time frames because that's where I like to be in this session. Completely untradeable at the moment, of course, with that bar. So that's pretty much all I wanted to do with my setup. So I would welcome. Yes, very similar, Lewis. Very, very similar. I would welcome any of your questions around any of that, because that, guys, is where I begin my week, and everything unfolds from there. So those 4 charts will be what I look at every single morning, and then I will go and have a look at this thing every single morning, but I'll switch from the weekly to the daily. So tomorrow morning, I'll be looking at today's candle for, you guessed it, a key reversal bar. Now I'll go through exactly the same process. And if that same process gives me more ideas or more to look at, then that's exactly what I'll do. I'll add them to my 4 down here. Now I don't willy-nilly pick 4. I pick the 4 best. And there are tons of them this week on key reversal bars. Is the euro on the move? It's also up on the 1 hour against the Aussie. Certainly on the move, mate. I'm not sure why. Let me have a look at it. That's probably why. It's at a support level. Inside a range. Let me go a bit tighter. Yeah. From a technical perspective, that's what you probably would have expected, I guess. Why so strong? No idea. No idea. Let me go here. So again, going back to what we just discussed, right? Market structure is absolutely 100% where I make my money, because I just have that noise inside my head that keeps telling me it's trending. It doesn't matter whether it's not trending. If it's doing the same thing repeatedly, why would I think that that's going to stop anytime soon? And what I mean by doing the same thing repeatedly is when it hits the top of the range, it goes to the bottom. When it hits the bottom of the range, it goes to the top. It may fake out. It may break out. And that's why we have a system that tells us one or the other. The one being the bounce, we're looking for off the top a lower high. If we don't get it, we don't trade. If it breaks out, we don't trade until it comes back in and gives us a lower high, which it probably hasn't done there. It looks like a news event, but I think I remember that candle. 30-minute chart may have given you a lower high. It didn't. So completely untradeable. So it doesn't always give you a setup, but you have to be alert when it comes off the top or off the bottom. And if it does give you the higher low, there it is, you trade it until you hit a resistance level. In this case, you wouldn't have got anything out of it because it came back. You would have got a TP1, but that's all. And back inside the range, higher low. That's what you're looking for. That bar there, beautiful, red. Problem, daily pivot. Not so much, because you've had the daily pivot broken, rebroken, rebroken, rebroken. You're okay to go there. So that's precisely what you're looking for off a range. And that's why I like ranges, because it doesn't matter if the market's trending. It doesn't matter if the market, pardon me, is not trending. You'll still get a range, and that range could be anything. It could be I don't know if Dave is in the room today. We were talking about this and all about market structures. Last week, David asked a question. He was struggling with finding market structures. And I've just given you the way I find them. Now, that's not the only way to find them, I'm sure. But to me, again, if it looks like a range and it smells like a range, it's probably a range. And it doesn't have to be a rectangle. It can be anything, as I said. It can be a channel, which is probably one of my favorites. Why? Because it's either a channel is either a trend continuation, or B, a trend retracement. Either are perfectly tradable because they do exactly the same thing. Where did I have a range before? Here, right? This is a range to me. Now, people will call that a trend, and that's why I say it doesn't matter if it's trending or going sideways or going inversely proportionate to science. I don't care what it's doing. If it's doing the same thing all the time, you've got to be able to recognize that. And this is doing the same thing all the time. It's going from here to here. As soon as it hits here, it goes here. As soon as it hits here, it goes here, etc., etc., etc. What you need to do, and the trick to this, is not doing anything until it confirms that it is coming off the top or it is going through the top. Or when it did go through the top, it's a fake out. No matter if it's a horizontal level, a monthly pivot, a weekly pivot, anything. If it's false breaking, it will tell you. It'll come back inside and it will give you, not all the time, but when it gives you the signal, that's when, and that's what I said before. If I don't trade that, I need to have a psych assessment, because that's absolutely my setup. So I hope that helps with understanding why I do what I do. It's not sexy. It's not, it doesn't give you massive results often, but sometimes it does. And trading off the top of ranges short, and off the bottom of ranges long, can be very rewarding, because if it does break to the offside, and that's what you're looking for, right? In particular in retracements, these work spectacularly in retracements. That's why I said before, if the market is retracing, it's even better than if it's not. So that's why channels are so important. If the market's retracing on a trend, let me find a trending pair. What's been trending recently? CAD pairs, Euro CAD. Hasn't been trending recently. But look at that there, that retracement there. Let me see if I can zoom in on that. Oh, I just grab a trend line, I must have. Okay, let me see if I can grab that. Right. What's the best place to trade a long from? The very best place to trade a long from. Any answer would be good. The best place from which to trade a long. Hate that. Okay, the answer is from as far away as possible. But the true answer is exactly right, Sweet. A bounce off support, right? So if you've isolated two equal lows, two equal highs, and you've got the start of a market structure, in this case, a descending channel, the very best place to get this reward from here is from here. And that is what you're trying to do every single time. Retracement, best place to get this reward from is there. It's when the market is going in the opposite direction to where the reward is, right? Always the best place. Does it always set up? No, sadly it doesn't. But you've got to be alert to it when it does set up. So in this case, you've got a multitude of setups here, but they all happened on resistance. When I say a multitude, they all have both of them happened on resistance. Why? Because I've just spoken to you about false breaks, right? But I don't often talk about false breaks of the daily pivot or the weekly pivot, the monthly pivot, or a horizontal level. But they happen all the time. And here's one such case. So we've got below the daily pivot, we've got two candles that opened and closed below the daily pivot. Then we got a rise above it. Then we got the retest. Enter there. You might have got, no, you wouldn't have got taken out because that low is not lower than that one. And you would have got all that move if you chose to trade that one. So it doesn't always happen as you want it off support, but you've got to be alert to this, right? If on a smaller time frame, you get the signal, and you may well have, if you had a trend line through here. I can't see it, to be honest. It's not there on this occasion, but maybe 2 out of 10, it does give you the right setup off the support level. Maybe 3 out of 10. If you get them and you catch that, wow. So that's why it's really super important to be aware of these market structures, these ranges, as I call them, right? So you combine that with, you know, your massive market structures like double bottoms, double tops, whatever they are, and then you get this sort of thing, similar to what we've described on Euro Pound, right? The big picture, you've got the big picture, then you've got on the weekly chart something that's telling you something that goes with the big picture. So big picture saying double top, we're looking for shorts, right? Medium picture is telling you key reversal, still looking for shorts. Daily is telling you that we've come underneath or back underneath or back inside, not only the channel, but the monthly pivot as well, and throw in the weekly pivot if you want to. And we're looking for a lower high here, but we've already got a setup for a false break. So that's the kind of thing that you're looking for all the time. This one is confirmed by that one, is confirmed by that one. Call it time frame correlation if you want. 4-hour chart, not really giving me anything at the moment, to be fair. But I'd probably get interested if it came up here and gave me a reject of those two, I'd say. So yeah, hope that helps, guys. That gives you an understanding of why I do what I do. And each and every Monday when I come in here, that's precisely what I've done on the Sunday. And I finish up with sometimes 4, sometimes 5, sometimes none. But it's very rare that I have none. And I'll build on that for the rest of the week. There's the weekly scenario. We've got those. We've got the 4 directions that we want to trade in our head. And we'll do exactly the same thing tomorrow on the daily chart. And if the daily chart gives me the similar to what I've just described, then I can go on and do something. Other than that, because I'm only trading end of day at the moment, I'm really not that interested. Really, I'm not. I'm interested in what you guys look at, and then I can focus on a chart. So like when Lewis, when you put in what's Kiwi CAD doing, I'll then go and have a look and say, oh, yeah, I hadn't considered it because it wasn't a key reversal bar on either the weekly or the daily, because that's how I find my trades on the end of day system. As I said before, there's that many ways to get into the market. There's that many ways to analyze the market, and you can come up with 4 different results on the same currency pair from 4 different traders, and they may all win. They may all win. They may all lose as well, but they may all win. And that's kind of why actions to wealth do what they do and expose you to lots of different systems and lots of different strategies. And I wholeheartedly commend them for that, because you've got to find the one that works for you. And mine may not ring a bell with you, may not resonate with you. You may think I'm a nut, and that's completely fine. Doesn't bother me one bit. I've been called worse things, I can assure you. But it's just my way, because I'm comfortable with it. Makes sense to me. And that's where you guys need to be. You need to find something that makes sense to you. And if it does make sense, then you can use it. You can, every day you go, well, okay, that makes sense. It doesn't necessarily suit a copybook trend trading system or a reversal system, but it makes sense. And if it makes sense and it continues to give you results, that's all there is. You're in a pound Aussie long, John. Let me have a look. I haven't got a pound Aussie chart. We'll create one. Oh, nice. Nice. You got a breakout. What'd you trade, mate? Daily bar on Thursday. That'd be that one. Okay, breakout. So you're long above that bar. Yep. Cool. And that goes exactly to my point. I wouldn't trade that. Tell you what, I'll leave you with this today, actually. There is a formula that, wow, I'm going back a long time now, and I can't quite remember it. So don't quote me on it. I'll do a bit of research and I'll go back in my notes, years, maybe, see if I can find it. With a breakout in trend, as you've traded, let's use this bar here, because that is the breakout bar. I wouldn't trade it because I haven't done the read, but the research is telling me everything. But I don't need to do the research. I can see it in the chart, what's happened here. It's all to do with ATR, although I'm on a 4-hour, it makes it a little more difficult. But if the breakout is, and I really shouldn't say this because I'm not sure of the formula, if it is greater than the 5-day ATR, so if the breakout candle is bigger than the 5-day ATR, or is it the break above? I'm confusing you here. Then that has got a very, very strong success rate. Very strong success rate. I'll see if I can find that for you. Please don't quote me on that, but it's something like that. And I have traded that in the past, but it does have to coincide for me with this sort of thing. So a dominant break, some of you guys will recognize what I call the dominator. That's not it, because it hasn't closed 1/3 of its body above the breakout. But this certainly looks like a goer to me at the moment. I think you're on a good one there, mate. So again, goes to show you there are so many ways to get into the market. And, I reckon if you just stick to the one that works best for you and do nothing else, you'll be a long way ahead at the end of the day, and we all do it. We all try different systems because we see, in particular, we get some sort of encouragement, I suppose, by watching other people who seem to be making good decisions and getting, a good win-loss ratio or whatever the case may be. You don't know what their accounts look like, but you've got a fair indication that these people can actually trade, right? So you think, oh, okay, their system must be the best possible system. It's not necessarily the case that their system is the best system, but it is the best system for them because they can use it. It makes sense to them, and they get in the market based on that. They manage the trade based on that. That's what counts. It's not about the system per se. It's about, and there's an old saying, it's not about the fight in the dog in the fight. Sorry, it's the fight in the dog. This is very much a case of that. You have to match yourself to the system that you're trading, or the system that you're trading to yourself. And it doesn't matter what I do. It doesn't matter what the best traders in the world do. You may not be successful at what they do. You have to find your own method. Certainly, and I love Lloyd coming in tomorrow, and he'll be with you for the next month, right? I love his little, I don't know what you call those things that identify yourself on social media. And I never remember the quote. I love it. It's be guided by your mentor or your trader buddy or something, but don't rely on him. And I think that's 100% apt, and I really do like it. You'll see it tomorrow because you'll be in the room with me, and I think it's a great quote, really do. Now, pound Aussie looks like it's a goer. Somebody else put something in there? No. He uses the daily wave on. Who uses the daily wave on? John does. Because it works for him. Awesome. That's exactly what you should be doing. If it works, do it. No argument from me. All right, guys, that's going to be me for the day. It was more a little bit of insight into me day than anything else, and I hope that hasn't bored you to tears. But I think it's important for you to know why I do what I do and how I do what I do, because when you're looking at me do stuff, often you'd be probably asking yourself, what the bloody hell is he doing that for? Now you know. That's why I do what I do. Smaller time frames and trading intraday, completely different scenario, completely different. I do look at the ranges though. The market structure is still very important to me, and I don't generally trade outside of that. So in other words, if we're coming off the bottom of a range, I'm really only looking for longs. And if we're coming off the top of a range, I'm really only looking for shorts. If we're trending, I'm actually looking probably to trade retracements because I'm not a trend trader. I don't think I've ever tried to be a trend trader because I don't like being on the same side as everybody else. I suppose that's just me. Righto, guys. Thank you very much for your time, and I hope you got a little bit of an insight into what I'm all about. I've got to look at the euro-dollar 30-minute chart before I go because that's my thing, right? And now it's a little bit more interesting because we did go to the top of the range. So we've now got something to do here. We've got something to look for, and that would be a lower high in here somewhere. Now, can we marry that up with something? It's going to be tough because there's no real trade line through. I suppose there is. It's going to be tough. I'm talking hours and hours away from here now, which is probably US session. But you've got your structures in there, and now it's pretty clear what needs to happen. So if I'm to trade euro-dollar today, and I wouldn't go outside this, right? This is my absolute criteria. Wouldn't trade it long with your money, John, at this point, because DR2 is bang staring me in the face. But that doesn't stop me doing it from down here. So if I got price down to here, bottom of the range, a little bit of consolidation, so 2 bars, back above it, retest it, then I'm a long. Same here. Up here, consolidate, underneath, retest, I'm short. So it's a pretty simple formula for me. I wouldn't be doing anything other than one of those two things on euro dollar today. I think that's why 30-minute chart, euro dollar, I've always had a very clear idea of what needs to happen for me to trade it. And that's just a very simple process for me. I've generally got a support trade line and I've generally got a resistance trade line. And if I'm in a range, then happy days, because I know exactly what I need to do. I'm going to trade from the bottom to the top. I need to see a false break. Trade the top to the bottom. I need to see a false break, which ultimately will give me a higher low in here or a lower high in here. Righto, end of sermon. It's a bit of a sermon today, wasn't it? I don't really apologise for that, because I wanted to give you a bit of an insight into what I do, especially those of you who are here for the first time. And if you're still in the room, good, you must have got something out of it. Guys, have a great Monday. And as I said, Lloyd will be with me tomorrow, as will Shukri. So should be a far more action-packed show than it was today. But I hope you got something out of it. Have a great rest of the day, and we'll catch you.